Hi everyone, I'm Peter Meksaros, and I have today a very special guest. He is David Cole from EMX Royalty. Welcome, David.
Peter, my pleasure to be here.
And thank you for being here because I've been to the Rule Symposium in Boca Raton in Florida, and your story was one of the best I could see there. So I'm very happy to chat further a few things with you. And to introduce your company to my viewers. So thank you very much.
Yeah, my pleasure, Peter.
My first question. Sorry?
Go ahead. I was going to say the Boca Raton meeting I thought was very fruitful. Yeah.
Yeah. Indeed. It was very nice to meet people finally after years of lockdowns. Yeah, definitely. Mm-hmm. So my first question is, what is your unique business model? What makes you different than the rest?
Yeah, that's a good question. The single thing that separates us from most folks in the royalty space in the mining sector is our business model. And we pursue the creation of wealth and adding of value to our shareholders through three avenues. One is the royalty generation process, which is the prospect generation business model focused on the royalty component. And what that is the acquisition of prospective mineral rights globally. We operate in 13 countries. Always are looking throughout the world for new opportunities to acquire prospective mineral rights, utilizing our geological skill sets. And then the building of geologic models illustrating the prospectiveness of those assets and selling those assets on to an industry that are, of course, very hungry for discovery opportunities as the demand for metals around the world continues to increase every year. And so we sell those assets on to the industry in exchange for cash payments, share payments, work commitments where money's going in the ground, and always a production royalty at the end of the day. And that's a great way to grow a royalty portfolio. It is a time-consuming way. It's sort of the difficult way, if you will, but it's very astute allocation of capital because it's an inexpensive way to build a royalty portfolio. And we've been doing this for nearly 20 years, building a portfolio that is nearly 5 million acres of mineral rights worldwide. And that is our sort of core strength. And this is the differentiating factor of EMX Royalty. And it speaks to our alpha, our differentiating talent, which is economic geology and economic geology talent that really drives our ability to do that. And our track record of selling prospective mineral rights onto the industry over that 20 years is phenomenal. Yeah, I believe we've sold 85 projects in the last 4 years or something. I mean, it's just this astonishing number. In addition to that, we also do what our competitors do, and that is buy royalties. Most of my competitors solely buy royalties or do royalty financing, and that is a competitive market. Those royalties typically go through a sales process and sell at a premium because everybody knows that royalties are phenomenal financial instruments because of their embedded, what we call optionality, which means exposure to the upside and exposure for things to happen that do not come at any cost to the royalty holder, because the royalty holder is not paying the development costs, doesn't pay the cost to build the mine, doesn't pay the cost to continue exploration work or do metallurgical testing, et cetera, et cetera, et cetera, all the things that accumulate up to massive capital expenditures in order to keep a mining operation going. Royalty holder doesn't pay any of that, yet they get a slice of it on the success side. And that creates this optionality. And that's what makes royalties such a phenomenal financial instrument. Mm-hmm. And coming back to the business model, everybody knows that. And so royalties trade at a premium. And so when you go through a sales process like we do, and our competitors nearly solely do, those royalties usually trade at a handsome price. The third thing that we do is we make strategic investments. So the same economic geologists that are out around the world looking for prospective mineral rights occasionally come across a company or a situation where we feel that there's an immense opportunity for an increase in value, and we buy shares. Only as a private placement, mostly in public companies, but also in private companies. An excellent example of that is our 0.1% ownership in premium nickel resources, which is just now going public. I believe it'll start trading today or tomorrow. And we've been a shareholder now for a while, and they're advancing what we believe will be one of the top 5 nickel sulfide systems in the world in Botswana. We're very, very, very pleased to have that. And that's the latest example of a strategic investment. We've had strategic investments within the company over the last 20 years that have paid out handsomely. We've made over $50 million in profits over our lifetime from making strategic investments. And those monies just get plowed right back into royalty purchasing and into the organic growth, acquiring prospective mineral rights. And so these 3 are quite synergistic. So there's a royalty generation, royalty purchase, and strategic investments. And the alpha for all 3 is strong economic geology talent and engineering talent to help us understand the potential that these assets have. And we've grown a portfolio through executing this business model now for 2 decades. And we're very proud of it. The Achilles heel, one of the big challenges for the mining industry is the long time lag that goes from initial prospecting to actual coming into full-scale commercial production. That can commonly be 10 to 20 years or more. And this is one of the interesting phenomena that is a challenge for all of society. And today, where the demand for metals across the periodic table is significantly increasing. Yeah. More and more types of metals are being used. People talk a lot about rare earth elements, but that's just the beginning. The demand for copper just continues to excel. And so we're seeing exponential growth in copper consumption. We believe it's very prudent to own prospective mineral rights and be exposed to them. We believe the best way to be exposed to those mineral rights is through royalties. So that's kind of a long-winded answer, Peter, but that's the description of our business model. We're in a situation where the portfolio that we have built is starting to ripen and nicely cash flow. And so it's an exciting time for us.
Thank you for the expanded answer, because that explained it much more in detail. And you mentioned that the prospect generator model was more cheap. What is your internal rate of return? Do you have a number?
So the internal rate of return on the investment portfolio is over 30%, and that's after tax. So I know that one right off the top of my hat. I've not calculated recently the internal rate of return on assets that we have purchased in the second part of our business model. I'm going to guess that to be right around, low double digits, 11, 12%. I actually would like to go back and calculate that. That's on the list of things for us to do. We like to track our key performance indicators within the business units. And then within the generative business, now that we have some assets that are coming into full-scale commercial production, I believe that the internal rate of return on that generative side is going to be a big winner. I don't have a number off the top of my head, but it's going to be well into the double-digit range.
Mm-hmm. Just to have an idea, what I wanted to hear is at least 10-15%. That's very nice. And
I can give you an example. So after a liquidation of a couple of different, sort of the rolled up business, after the liquidation of our investment that we had in the Malmish copper gold discovery in far southeastern Russia, which we liquidated prior to the issues with Russia in 2018, we had more cash in the bank than all the money we'd raised in the history of the company, in addition to, at that time, 3+ million acres of mineral rights. And that's definitive that the business model is working great when you have all the money you've ever raised in the history of the company in the bank. We've since deployed that capital, buying more cash flowing royalties and growing our portfolio substantially. But we have been in that situation a couple of times in our history where we've liquidated a strategic investment and had as much money in the bank as we've ever raised.
So these are the numbers today, and they are very convincing. But rickrule told me that he's a shareholder of yours, and he didn't become a shareholder today. Maybe today he expanded the pack, I don't know. But what did convince Rick to be a founding shareholder in the past? So what is it, management qualities, or what was the convincing factor for Rick to join you?
So who's this gentleman's name again? I'm sorry.
Rickrule.
Oh, Rick Rule.
Rickrule.
Yeah. So Rick Rule is definitely a shareholder in the company, and he's been with us from the very, very beginning. And he's bought shares for some time in the company, been supportive throughout a number of financings we've done. And what Rick focuses on solely, or most prudently, when he makes an initial investment, is the intellectual quality of the people that he's investing in, and looking for entrepreneurial geologists that he knows can put the money to good use in the field and acquiring prospective mineral rights and executing whatever business model he's investing in. So he doesn't always invest just in prospect generators, but that is one of his key areas of focus. That's one of Rick's favorite business models. So he's always loved our business model, and he took a liking to the team that we put together from the very beginning, and that team's only grown over time.
Okay, so the expertise. So you have, thank you. Do you have then the diversification in your business model? But in what other sense are you diversified?
Well, across the commodity space. So we focus on metals.
Yeah.
And so we have a broad exposure with a concentration in gold, silver, and copper, lead, and zinc. But we also have exposure to molybdenum, nickel, cobalt, platinum group elements. And we just love to be exposed to all the metals. That's where our geological talent lies, is in the geology of metal deposits. We are particularly aggressive at acquiring what we call battery metal projects, which are sulfide nickel systems that commonly have byproduct copper, cobalt, and/or platinum group elements. We believe that these are particularly good assets to be exposed to, good mineral rights to own. And we've been focusing on that for a while. That includes the premium nickel resources investment. We always love gold. You cannot own enough gold. The market is continually looking for more good gold projects around the world. And so a key area of focus for us is copper, gold, and nickel.
Yeah, that's very nice. The battery metals. When I look at my research, I definitely support that. And you told me many, many nice things. What could go wrong? Well,
commodity prices always ebb and flow.
Yeah.
So from my viewpoint, over the last 20 years, all we have done is just execute good business and grow the portfolio over time. But the share price doesn't represent that. The share price can go up substantially, and we can have a higher share price than I think is appropriate relative to the innate value of the portfolio. And it can go down substantially, despite the fact that we've done great work. And that's the ebb and the flow of the capital market business cycle, right? And so, we're commonly in situations where we just feel like we're doing great business, and we can continue to execute our business, acquire prospective mineral rights. In fact, we have a great track record of utilizing the downturns to acquire more prospective mineral rights and then sell them, a few years later, only to see things bounce back and come up robustly. And so you can see that in our share price. And as Rick Rule oftentimes says, you want to utilize the cycles to your advantage rather than be used by the cycles. And we're in a downturn right now. Our stock price is roughly cut in half over the course of the last 2 years. In my view, this has created an opportunity, but certainly our share price, like anybody in our sector, is not immune to these cycles. And we are in a cycle right now, despite strong demand across the globe for metals. There has been a distinct slowdown associated with this recession event that people are talking about, and some of the dynamics within China has caused the price of commodities to take a step backwards, and that's represented in the share price. If a particular investor feels that that's going to continue, then you'd want to wait. If you think that that's likely to end and we're going to see continued increase in metal demand, then that would be a good time to invest. I'll let your investors make that decision.
Yes.
But certainly, just capital market movement and business cycle issues was always a risk. It's a risk to the upside as well as to the downside. That is tied to commodity price risk. And that risk is also to the upside and the downside. There's always risk for counterparties. That's the company of which we've sold the royalty to, or currently operates the mine where we have a royalty. Sometimes counterparties are poorly managed, and certainly we like to pick good counterparties, and we do the best we can. But sometimes they sell to somebody else, and we're not immune to having counterparty issues, and there can be a dispute as to the agreement. Of course, normal business issues. We believe that having a royalty portfolio, you're actually minimizing that risk because you have all these different assets around the world. Another one is governmental risk. Things can change with governments with respect to how they support or don't support the mining industry. The United States is a great example. It's very difficult to permit new mines in the United States, despite the fact that there's a robust demand for metals in the United States. So it's an interesting dynamic situation. So all these risks are out there. I actually believe that in general, owning royalties, because you're not exposed to the cost structure for developing those mineral assets and producing those minerals, that's an excellent way to mitigate the risk in the business, is through the ownership of royalties.
Yeah, thank you. And you mentioned the share price, which was cut in half, something like that, or something like that. And I also think that Mr. Market is not always right. Actually, more often not right than right. And that's good for us, because if we can skip the extreme overvalued situations, then we get also downwards more opportunities to buy. And but the share price was cut in about half. That does only make sense if we know, what is the value of the company. So what is your value proposition? What is your net asset value in relation to the share price about today? What may be mentioned openly? What may you tell us?
So I know exactly what our internally calculated net asset value is. Unfortunately, I'm not legally allowed to tell you what I believe that to be. So, and that's based upon 43101 regulations in Canada, which limit what we can say. But I can point you to the H.C. Wainwright report, and they have done, I believe, a very good job. I would be critical of a few things that they did, but generally speaking, I believe they've done a great job of analyzing our asset base, and they continue to follow us as a place to look at what they feel the value of EMX. I believe their current target price on us is $425 USD per share. I think that's a reasonable number.
That's the fair value, do you mean? Or
that's their target price, and you can read their report. So that is what they believe is the fair underlying value.
Okay. And if I open your company presentation, can I find more information about the net asset value?
No.
No.
Because of the reason I just mentioned.
Okay.
That's right.
Just to be sure that for others, what they can expect if they open.
So I will say that because we have a number of key assets within the portfolio that are just now coming into significant cash flow. The Gediktepe royalty, where we've already passed the threshold for it to be in full-scale commercial production, and so those royalty checks will start. We're expecting the first royalty check literally any day. Likewise for Balya, also is in the same situation. And the Timok project, we will have that royalty settled and start to receive royalty checks in the very near future. So these are significant catalysts that just fortuitously are happening about the same time. And the market is waiting to see those come to fruition. And then after they've come to fruition, I believe we'll get full credit for those. We also are certainly in a time in the market where it's risk off. So people are not paying for upside until they actually see it come to fruition, which I completely understand. And I'm very confident these specific catalysts will come to fruition in the very near future, actually. And that should result in a nice repricing of our shares and getting close to what H.C. Wainwright has predicted, I hope.
Okay. And thank you for mentioning a few examples of your projects. So I was born in Hungary, and that is close to Serbia, where your Timok mine is. And why is that a key asset? And if you can expand on that, and the next one would be Botswana, what you do in Botswana.
Yeah, happy to. Those are two good assets in the portfolio. The Timok discovery, I'll go back and give you a little bit of history. We played a key role in the discovery of this copper and gold deposit, which is now the largest copper and gold deposit known to exist in Europe, and comes in the terrain that we call the Timok magmatic complex, which is a belt of mineralization and igneous activity that exists in Serbia and has been Europe's largest historic copper and gold producing region. And we recognized the geologic potential there early on. And we came into Serbia. It was our first business unit in the history of the company 20 years ago as a private company. Mm-hmm. We worked with the Serbian government to rewrite their mining law, rewrite their concession law. And this was all just after the Balkan Wars had finished. So we came in, it was still a tense time, but we like to be an early mover. We advised the Serbian government with respect to their legislation and how to attract foreign investment. And we opened the doors for foreign investment in Serbia and acquired some significant exploration licenses. We then, part and parcel to our business model, put together the geological information and sold those on to a company called Reservoir Capital, mm-hmm. who then advanced those in a joint venture with Freeport, the largest US copper company at that time, and made a big discovery. And as luck would have it, that big discovery was just off of our license, wasn't actually on our license, very close to the border, actually. But we saw what was going on. And this is a good example of the integration of buying royalties and growing them organically. Because we were in the area, we understood the geology, we had grown royalties organically through selling them on to Reservoir and Freeport. We knew what was happening. And so when they started to make that discovery, we quickly went out and bought the royalty over that deposit at Timok and for an astonishingly low price, only 200,000 Canadian dollars to buy that royalty. And then that's now a key royalty within our portfolio. And that's a great example, the execution of business model. It's a great example that you can conduct this business model and only win a couple of times and have it pay off in spades. And this is one of those examples. This is a royalty that will pay hundreds of millions of dollars over its lifetime, and is one of the most significant copper and gold development stories on the planet. It's now operated by Xinjiang. It's changed hands. It was sold by Freeport and Reservoir to Nevsun, and then Nevsun sold to Xinjiang. So Xinjiang is now operating that. And we're very pleased to see Xinjiang's success there.
And Botswana?
So Botswana is a strategic investment opportunity where we were aware of a small private company headquartered in Toronto, which was acquiring a key past producer of nickel and copper, cobalt, and platinum group elements mm-hmm. in the Salibe and Selkirk areas of Botswana. And they had an agreement in principle with the Botswana government to buy this past producer and portions of it at least. And we believe the geology was just amazing. It had not seen any modern exploration. We believe that the technical team of this company of Premium Nickel were really sharp. They have excellent geophysical skill sets and understood how to use electrical methods to delineate further sulfide mineralization at depth. And they've been very successful in their drilling and in advancement of the purchase of this. And they now own this asset and have been doing aggressive exploration work. And I think we'll see some press releases coming out here in the very near future. Mm-hmm. They have gone public via a reverse takeover of North American Nickel, and they're changing the name of the company to Premium Nickel Resources. The ticker symbol will be PNRL on the Toronto Stock Exchange. And after it has gone public via the reverse takeover, EMX will own 5%. I wish that we owned more because I'm very bullish on this particular asset, but I'm glad that we own at least 5% after it's gone public. Yeah. And I would encourage anybody interested in the battery metal space to take a close look at this. And we do view Botswana specifically as the best or one of the best countries to invest in Africa.
Yeah, and not many people are looking there yet, because I think Africa is still not very well known for the average investor in the Western world, I mean, right? So everybody is focusing on the Americas, maybe Australia, but Africa is, I think, on the sideline. So yeah, it's still under the radar, but I also think in the next few years it will go above the radar. Yeah. And what do you plan to do in the next 12 months to increase the shareholder value?
Well, we're just going to continue to do what we've done for 20 years, Peter. And that is, we take advantage of this downturn to acquire more prospective mineral rights. We continue to market, and we've slowed down the sale of assets because there's fewer companies that have money in the bank to buy them, but we're still selling projects. Just recently announced the sale of a couple of assets, and we continue to sell more projects over time, and looking for opportunities to make new strategic investments. We always have geologists in the field looking at very interesting things. And I will point out one in particular project that I like, that we have made a small press release about, and that is our cobalt discovery in Queensland, Australia. We were actually prospecting for gold and stumbled across this cobalt zone that we did not know existed on our property. It's not known previously at all. And it's complete grassroots discovery. That's very high-grade cobalt mineralization sticking out of the ground for kilometers. So we're very pleased about that. I believe that we'll be able to execute a very interesting business model to advance that cobalt discovery.
Okay, that sounds great. And you mentioned also earlier a few catalysts. And how did you, I know that you have minimal dilution after these 20 years. How did you achieve this minimal dilution?
Yeah, that's a great question. So, you know, as I mentioned, we've made over $50 million US from our strategic investments. So that's $50 million US that I didn't need to raise, right? Yeah. Didn't issue share capital, of which I've been able to pour back into the business to grow the portfolio. So that's one key way right there. But the other thing is that we're always very careful with respect to the assets that we buy. The share valuation, if we pay in shares at the time that we're making that purchase, we refer to that as cost of capital. Keep a very close eye on that, and make sure that these are distinctly accretive transactions, such as the purchase of the royalty portfolio from SSR. We bought a major mining company's royalty portfolio that they have grown over the years. We bought that wholesale. They became a shareholder in us. We paid half cash, half stock. And they're delighted to be a shareholder in EMX today, as one example. So, you know, just paying very close attention. And I've oftentimes said that we're the value player on the block within the royalty space. Many of my competitors who only buy royalties, they don't grow them organically. They issue copious quantities of shares to buy royalty assets to be able to create momentum and then capture that momentum in the marketplace. That's never been our style. We've always been methodical. We focus on astute allocation of capital, and that's why we're sitting here today after being in business for 20 years and being exposed to close to 5 million acres of mineral rights worldwide, with only 109 million shares issued and outstanding.
That's nice. Thank you. And many of my followers like the classical, dividend grow investing. Do you have a dividend plan, or do you have a vision for that?
Yeah, so I'm more than happy to answer that. And I get asked this question a lot, particularly in Europe. I know a lot of our European shareholders are quite interested in understanding if and when there will be a dividend. And the answer to that is that we will pay a dividend, but our large shareholders really are not demanding a dividend and have not asked for a dividend in the past for one very simple reason. They're confident that we have a track record of astutely allocating capital, and they'd rather see us use the monies that we have to continue to grow the portfolio. So I think that the happy medium to look for from our perspective is to pay a small dividend with a small payout ratio relative to our profits, to check the dividend box, but continue to allocate capital in the space, as we have a great track record of doing that. I'd like to see a dividend sometime within the forthcoming year, might even be sooner.
I don't mind the dividend, of course, but I also agree with you that it is not necessary, because if we can really see that, yeah, if you have to pay this dividend and we have to pay tax on it, and then this money is a much better place at your side than at my side of my government. So I would prefer your side. So I agree with that. But okay, it is nice.
One thing I've noticed, Peter, is that everybody has a strong opinion about this subject.
Yeah, but I think at least, of course, none of this is investment advice, personal investment advice, but I think I like, of course, the dividend investing, but it's also nice to get diversification in my strategy of investing. So I not only like dividends, because it's only one part of the world. So if I see that, yeah, your internal rate of return is so huge, for example, yeah, so it's not necessary for me, but there are many people, and as you mentioned, probably it's good for you to tick this box, right? So yeah, advantages and disadvantages.
Yeah,
I'm open-minded. So the next question is, how do you profit from the fact that the political risk is overrated, while the geological risk is underrated? Because
so that's an interesting question, and I've discussed this many times in the 20-year history. As we've worked in some very interesting places, such as Russia, such as Haiti, and now we have our investment in Botswana. I would not put Botswana on the political risky scale at all. I think that's a great place to invest, actually. But Turkey, some people perceive Turkey as being risky. We don't see Turkey as a great risk, actually, as well. But everybody reads about governmental changes and political risk in the newspaper every day. It's a common topic of discussion. Newspapers love to write about it, if not exaggerated. And so it's perceived to be a very well understood risk that's out there in the world. Very few people understand geologic risk and how large geologic risk really is. Lots of folks like to talk about their great geology of their project and how their project is likely going to become the largest mine ever or something, usually some bloviated statement. We view that technical risk, engineering risk, metallurgical risk, environmental risk, geologic risk, all are quite significant, and they're multiplicative. So those risks are multiplied times each other to come up with a total project risk. And that's the far riskier side of the business than the political side. But even though that's the case, what everyone talks to me about and asks about and are concerned about is political risk. We believe that actually creates an opportunity in our space and in our sector to capture areas that have much lower geologic risk in exchange for maybe only slightly or maybe even not any greater political risk. Maybe it's a perceived political risk, such as in Turkey would be a good example. We believe Turkey is a stable place to invest and have for many years, and I've worked there for many years. So it's an interesting topic, and I'm sure you understand the gist of what I'm saying. Not that many people fully understand the aspects of the technical risks of the mining industry. But they see the headlines in the newspaper.
Yeah, because it's something, if you don't know enough about it, we are naturally afraid, right? So probably that's why you get these questions. You mentioned Turkey. All the things we hear about Turkey is negative. So, oh my, they're developing an asset in Turkey. Oh, why? But yeah, you've been there, you work there, then it's a different, you have a different view than me, who just reads the newspaper. So that's right. So, and yeah.
Let me add a point onto that, if you don't mind.
Yeah, of course. Thank you.
A place that is political risky to sell cell phones is completely different than a political risk for a mining business.
Yeah.
And the great example is the United States, right? So with the possible exception of Wyoming and Nevada and some parts of Arizona, It's very difficult to build a mining operation in the United States. Look at the Pebble discovery in Alaska. It's the largest copper deposit found in the history of the United States, and it can't get permitted.
Yeah.
They've invested over $500 million now in advancing that asset, and it's nowhere closer to production than it was 10 years ago. And this is a real shame, but that's a type of political risk, right? So it's not that it's risky and that, we're going to see a major wholesale change in the governmental aspects of a given state or the country, but it is the fact that it's very hard to get the government on board with the concept of extractive mineral production. And even though by law it says that the Pebble mine should be able to be moved forward, they're just simply not getting the permits. And so that is the type of political risk that the mining industry faces that other industries don't.
Yeah.
And so I would put many places in the United States as very high political risk because of this phenomenon. I'll point out that the Nordic countries in Europe have a very mature attitude about this. They have what we believe are very clear rules about where you can work and where you cannot work. And they have quite clear environmental legislation that's easy to understand. And so it's quite clear what we can and cannot do. And so, of course, the industry follows what they can do. And then the attitude of the governments there is, please build a mine. So the permitting timeline in Sweden is astonishingly short, as one example. And that's very robust with respect to our attitude towards investing in Sweden, which is why Sweden is an area of key focus for us.
Yeah. Okay. Thank you. And I have another question, but it's only, it's only related to your company. I'm also a carbon credit investor, and it's not your core business, of course, but it's also a commodity. Do you plan to involve carbon credits into your portfolio later?
At this time, the answer to that is no.
Mm-hmm.
And I'm more than happy to explain. I would never say never, but we certainly want to leverage our technical talent into a portfolio for our shareholders. And we don't have any technical talent around the carbon space.
Yeah. Okay. Thank you. That's no problem. And what do I forgot to ask you? Do you would like to talk about something else? What I did not ask?
Well, of course, people love cash flow.
Okay.
And this is a business where the cash flow comes slowly, but when it comes robustly. And we're at the fortunate situation where we're at the tipping point where a number of key assets that we've been building over the course of the last 2 decades are coming into strong cash flow. Mm-hmm. And that would be the cash flow that's eminent from the Gediktepe gold and silver mine in Turkey, the ongoing cash flow from the Caserones copper and molybdenum mine in Chile, which is paying us over $7 million per year after tax. Mm-hmm. The forthcoming cash flow from the Timok project in Serbia, that'll be a key asset. And then the Balya lead zinc silver project that is also coming into commercial production right now. So these are accumulating together to put us in a situation where our top line revenues are growing substantially.
Oh, that's great. And we like to see that for sure. Okay. Thank you very much I don't have many more questions for today. I'm happy that you were here, and it's not just that you answered questions, but you educated us further how to think about this business. So thank you for being here.
It's a fascinating sector. I've grown up in this business. I've been quite passionate about it my whole life. So I'm more than happy to come back and talk to you anytime.
Thank you very much. I really enjoyed every minute. Thank you.
Thank you, sir. We'll talk to you soon.
Okay. Goodbye.
Goodbye.